This is Mark Zuckerberg, the founder of Meta, the parent company of some of the most important applications on the internet, Facebook, Instagram, and WhatsApp. With $82 billion, he currently sits at the 15th place on the list of the world's richest people. Right above him is the creator of the biggest online marketplace, Amazon, Jeff Bezos, with a net worth of $128 billion. Next, we have Elon Musk, the genius behind Tesla, SpaceX, and recently Twitter, with a net worth of a staggering $178 billion. And finally, Bernard Arnault, the man behind luxury fashion brand Louis Vuitton, which is part of the esteemed LVMH group. With a net worth of $235 billion, he currently holds the title of the richest person on the planet. We're all familiar with these people. We know them to be entrepreneurs, smart, and have a lot of money. I've put them here as a reference for the next person. Now let's reveal the final card. I'll give you a couple of seconds to think of who that man might be. That face may be unfamiliar, but don't be fooled. He wields tremendous influence over everything around you. Meet Laurence Douglas Fink, also known as Larry Fink, the current chairman and CEO of BlackRock. While Fink's personal net worth may not rival those that we just discussed, the company he handles, on the other hand, BlackRock, is in a league of its own. In fact, it is so big that it puts the others to shame, combined. To put that into perspective, BlackRock's value is equivalent to 56 Elon Musks. Imagine that. It is said that BlackRock controls 25% of the money in existence today. To put that into perspective, that's 10 followed by 13 zeros. A whopping $10 trillion in assets under their command. It's a little hard to visualize that number, so here is a little simplified knowledge. BlackRock exceeds the GDP of every single country in the world except for China and the US. So basically, if BlackRock was a country, it would be the third richest country in the world. That's right. And yet, you've never heard of them, which is weird. But hang tight, I'll explain to you why as we delve deeper into this video. Anyhow, BlackRock is the reason why the price of healthcare is so expensive, the reason why the price of homes have skyrocketed, and the reason why banks got bailed out in the 2008 financial crisis. There's not a region of the planet that BlackRock does not touch or influence. So before we get into the appetizing stuff, we need to first understand what is BlackRock and what they do. And I know this might seem boring to some, but please stick with me because all of this connects together. BlackRock is the world's largest asset management firm, which means it manages money that belongs to clients of all kinds. Banks, insurance companies, billionaires, corporations, foundations, governments, and more, which then invests them strategically to grow their clients' finances and portfolios. Let me break it down further using simpler terms. Imagine you're a billionaire with a substantial sum of money idling away in your bank account. BlackRock would approach you and then say, "Hey, you've got a lot of money just sitting there. Why don't you give us control over it and we'll invest it in stocks, bonds, or even real estate to earn you more money?" And that, in a nutshell, is what BlackRock does. Take their clients' money and make more money out of it. But you might be wondering, how does BlackRock generate revenue from just managing clients' funds? Well, they generate income through two channels. The first one is they charge a fee on the assets they manage, which could range from 0.5% to 1% annually. It may not seem like much to you, 0.5%. How could they possibly make money with that? When we're talking about billions of dollars, however, that 0.5% adds up to a significant sum of money. Let's say they manage $1 billion, then they will go on to earn $5 to $10 million a year at least just from fees. And they've got $10 trillion under management, so you do the math. And this brings a more important question. What do they do with this $10 trillion? Where does this money go? Well, that's what makes them the puppet masters. BlackRock makes what's called an investment loop. Here's how it works. BlackRock takes money from investors and puts it into other companies that are using BlackRock to manage their funds that go to the original investing companies. I'll simplify it for you. For example, Microsoft is indirectly investing in Apple, while Apple is also investing in Microsoft because both companies are using BlackRock to manage their investment funds. It's like a financial loophole where BlackRock gets to make the call who gets the bucks and who doesn't. And what makes them powerful is that BlackRock is one of the top shareholders in all of the US major banks like JP Morgan Chase, Bank of America, Wells Fargo, Citigroup, the list goes on. And that's not it. BlackRock is the top shareholder in Apple, General Electric, General Motors, Alphabet, Microsoft, Meta, AT&T, Verizon, Intel. They also hold major shares in various companies such as Johnson & Johnson, Amazon, Visa, MasterCard, Coca-Cola, PepsiCo, Nestle, Pfizer, United Health, ExxonMobil, Home Depot, Walt Disney, Comcast, Boeing, Delta, McDonald's, Starbucks, and a whole lot more. And they're all investing in each other thanks to BlackRock. So it's not just one or two or 10. Basically everything out there that makes money, BlackRock owns a part of. And that's not even the scary part. Although BlackRock owns and manages a lot of money, they remain unregulated. In other words, they operate under the radar, which is one of the scariest things I found out when I started the research journey. How come a company of this magnitude remain unknown and only a handful of people knows about it? How did it become so massive to the point where it can single-handedly send the entire planet into a financial crisis while evading the scrutiny of the US government? And why are they called the real puppet masters? If you're curious and you want to know the truth of the deep state, well, that's what this video is all about. So click the subscribe button, like this video, and stick around till the end. Things will change after watching this video. This is Shortary, and welcome to a new video. So for us to understand how BlackRock operates, first we need to learn about Larry Fink, the CEO. Born in 1952 in Los Angeles, California, one of 3 children to a Jewish family, and he always got good grades. Eventually, he ended up going to college in 1974 at UCLA, where he got a degree in political science and an MBA in real estate. Then, in 1976, he started his career at First Boston, where he was one of the first mortgage-backed security traders and eventually managed the firm's first bond department. He was very well respected amongst his colleagues for how successful he was and the department. And because he was Jewish, his department was called the Little Israel. However, that wouldn't last for long. In 1986, Larry got a little overconfident and made a prediction about interest rates, which turned out to be wrong. And his department would lose about $100 million in just a quarter of the year. This was the point where everything changed for him. After the disaster, he left First Boston and decided to start his own company where he would invest clients' money, but also incorporating a comprehensive risk management strategy where those types of losses would never happen again. So in 1988, Larry, alongside some other traders, founded BlackRock, an asset management firm, and Larry became its director and CEO. Within 5 years, BlackRock managed more than $20 billion, and then 6 years later, BlackRock continued to grow and acquired many companies throughout the 2000s. And they acquired a lot of companies. For example, in 2006, BlackRock acquired Merrill Lynch Investment for $9.3 billion. In 2009, they acquired Barclays Global Investors for $13.5 billion. And then in 2019, they acquired eFront Alternative Investment Solutions for $1.3 billion. BlackRock acquired a lot more than that. I just wanted to mention these 3 examples. All right, that was a little history about Larry Fink and BlackRock. Now it's time to dig into the juicy, strange stuff. How the hell have we heard of BlackRock before? If you think about it, all major US banks like JP Morgan Chase, Citibank, and Wells Fargo, they often make it to the news, even though they control way less money than BlackRock. So how did that company manage to remain under the radar? I've got 2 words for you: media control. You see, the reason you don't hear about BlackRock is because they have massive investments in all major media companies that would normally have made you aware of his existence, such as CNN, CBS, Fox, Disney. For example, BlackRock owns 18% of Fox, 16% of CBS, 13% of Comcast, who owns NBC, MSNBC, CNBC, and the Sky Media Group, 12% of CNN, 12% of Disney, 10% of the Sinclair Group, which controls 72% of households' local TV. And that's just to name a few. So basically, the mouths that are supposed to tell you about BlackRock are shut. On top of that, because they get a seat in the board meetings, not only do they allow themselves to stay out of the news, but also control what gets into the news. I know this might sound like a conspiracy theory to you, but they are this powerful. Big investors such as BlackRock, Vanguard, and State Street, the big three, do more than vote their shares. They talk directly to management. It's unlikely that a reporter in the field would care about what BlackRock thinks. However, BlackRock's opinions might matter to a publisher or owner who could influence the decisions of an editor or newsroom director. Eventually, when certain facts are being said and others being left out, it's difficult to identify where the influence initially came from. However, when you look at the holders chart, you know exactly where the news came from. The point is, BlackRock has the power to shape geopolitics at the grandest of scales, shape it through media and their algorithm Aladdin. BlackRock's secret weapon isn't just media control or the widespread massive investments. No. It's an advanced algorithm that has been shaping global markets for decades, and it goes by the name Asset, Liability, Debt and Directive Investment Network, or Aladdin for short. Now, this is what makes BlackRock, and it is their second source of income. We all know that business and risk go hand in hand. That's why you need a risk management system in your business, or else the prediction of risks would be obsolete. And that's what this program is for. Simply put, Aladdin is like a big brain that helps managers take care of all of their investments. It tells them how risky their portfolio is and what types of things they're invested in, like stocks or bonds. It even shows how much money is in different currencies like dollars and euros. It's like having a really smart friend who helps you make good choices with your money. In fact, Aladdin is so good at what it does that it currently manages $21.6 trillion in assets. And that's almost half of the money circulating around the world. Assets from all parts of the globe, mega banks, governments, insurance companies, you name it. It collects data points on every market, every company, and every asset, and uses machine learning to calculate which trades to make in less time than it takes for your brain to send an electrical signal through your nervous system to your fingers. The network that makes up Aladdin is approximately 5,000 supercomputers that now act as the central nervous system for the world's economy. If Aladdin network were to be hacked, BlackRock would go down with it, and eventually so do we. Should BlackRock face a crisis, the rest of the world will be forced to come to its rescue, not out of kindness, but out of sheer self-preservation, the absolute meaning of too big to fail. However, the more significant problem is the monopoly that this algorithm has created. BlackRock leases out its valuable technology to the highest bidders, typically large hedge funds and megabanks. This system puts small investors at a disadvantage and gives companies like BlackRock and Vanguard the power to direct the economy as they please. BlackRock doesn't only use their software to monitor smaller companies, but also what's called ESG investments. Now that's a notable idea turned marketing scam. ESG Investments stands for Environmental, Social, and Governance Investments. ESG investing is an approach to investing that takes into account the impact that the companies have on the environment, society, and overall management practices. Notably, you can invest in those companies through the S&P 500 index fund. To put it simply, if you're a young investor who wants to make a positive impact on the environment and society, the S&P 500 will say, hey, here's a list of companies that have positive environmental practices. By investing in these companies, you can feel confident that you're doing your part to make the world a better place. Ironically, some companies in that index do the exact opposite, like oil and mining companies such as Marathon Oil, Occidental Petroleum, ExxonMobil, Devon Energy, and more. So what environmentally friendly companies are they talking about? I came across an article that mentioned Rio Tinto, a big player in the mining industry that has a good ESG score. According to the article, Rio Tinto plans to, and I quote, will be a 100% clean mining only. How is that even possible? Mining involves extracting minerals and then refining them to make them usable. It's like saying that you're going to bake a cake without any ingredients. Sounds a bit unrealistic, don't you think? Overall, the ESG investing is widely known as a scam, like the big companies that are teaming up with the banking industry to come up with this imaginary score and index to make more money out of the good people. Or as Elon Musk put it, corporate ESG is the devil incarnate. Because the index has removed Tesla from its list for a lack of low carbon strategy and codes of business conduct, along with racism and poor working conditions reported at Tesla's factory in Fremont, California, Elon had more to say about ESG investments. Exxon is rated top 10 best in the world for their environment, social, and governance by the S&P 500, while Tesla didn't even make the list. ESG is a scam. It has been weaponized by phony social justice warriors. We can't argue with Musk here. Oil companies have better scores than Tesla, while the EV company is considered too bad to the environment that it got completely removed from the index. Well, that S&P 500 index fund is owned by S&P Global, which is owned by, you guessed it, BlackRock. I haven't even talked about the company being the first helper if the US government and the world is in a financial crisis, or how the employees are trading with the government. If you're interested, just let me know in the comments section below, and I'll make a part 2 where we talk about the massive influence over politics this company has. Thanks so much for sticking it out to the end. I hope you've learned something. And if you've enjoyed the video, I would love to have you as a new subscriber. This is Shortary, and I'll see you in the next video. Thank you.